Good morning, everyone. This is the live daily market outlook for Windsor Brokers for Monday, 13th of July, 2012. I'm back after 2 weeks of holidays. I hope you had a good cooperation with my colleagues that were replacing me during this period. And also, I ask you to forgive me if I missed something today. I'm now brand new in the business after 2 weeks of being absent, and to be honest, and not seeing much of the news or any market movements. Just wanted to take a full break and relax myself. But as I can see, not much happened basically from the time I left until today. And actually the main point is still weakness everywhere, and not any positive signal seen yet in current situation that is threatening the whole world economies. The consumers and businesses are hanging fire because of doubts over U.S. tax and spending policies. Also, how aggressively Beijing will respond to the slowing Chinese growth. That is another one of the alarms that came recently. And of course, above all, is how the Eurozone's debt and banking crisis will unfold. So far as I could see briefly this morning, nothing serious happened. Of course, it's August and time for holidays, so most of the actions are now a bit on hold until September starts, and most likely then we are going to see some more action. The positive tone is seen on the commodities with the well-known Middle East problem, and the recent dispute and I would say heavy comments between Israel and Iran about Iran's nuclear weapon production and the possibility of deepening the conflict in the Persian Gulf, where Iran from one side and Israel and the US from the other side are involved, as well as conflict in Syria, are keeping the oil prices quite good, supported with the $93 per barrel seen on the WTI oil for September, with the highest one seen at 94.69. This was last week, with also gold being quite good, supported, gaining for approximately seventh session. As dimming prospects for global growth support expectations of more stimulus from measures from the central banks around the world keep the yellow metal well supported, and so far being favored by investors as it clearly broke its 1600 barrier and heading towards the upper boundaries of recent range. I would say 1630, 1640 zone is our upside target, with quite a positive tone seen on the larger time frames that we are going to take a look later in our technical part, seeing yellow metal well supported for now. Not to lose much time, I think there is no much to be seen on today's calendar. The German's WPI for July has been released. 0.3 is the release, no change from the forecast, and not much to be seen from the major countries. French current account is I think already been released. We don't have the releases, and as Monday, today is Monday, and usually the calendars for Monday are quite thin. Nothing until late evening when the New Zealand retail sales coming, and then Japan industry activity index that is due to, according to GMT, at 2350. Actually, it's going to be already in the new day, so we are not going to spend much time on these things. Let's first take a look on the markets and see the latest movements of the major currencies and the commodities that we are basically all looking for. Starting with the euro, the general outlook for euro remains negative despite the recent action higher of 120.42. That was 24th of July low, with the 124.40 seen so far, and the recent movement, corrective pullback of 124.40 has so far retraced exactly 50% of the rally from 120.42 to 124.40 with the double top seen at this zone posted on 6th of August and pardon, 7th of August, with set 50% being retraced so far at 122.40. Near-term action shows the other way, rather sideways movements of 122.40 low of last Friday, with upside being so far limited just above 123, where the descending 55 days exponential moving average keeps the upside limited, and more pressure seen on the attempt of bearish crossover of 20 days exponential moving average below 55 days one, that is keeping the upside so far quite well protected, and the indicators are all in the negative territory, seeing more potential for further extension lower and further retracement of the recent rally from 120.42 to 124.40. Immediate support is 122.60, and the more important 122.40 low of last Friday, as well as 50% retracement, lots of which would be a signal for further extension and further retracement of the rally, with the more significant supports seen at 122.20, 122 zone, where we have lows of 30th of July and 1st of August, as well as 61.8% retracement at 121.94. I would say the quite big risk would be seen if we lose this level. That will signal further movement, further extension lower, and the possible test of very important higher low at 121.33 posted on 2nd of August 2012. As said, near-term structure remains negative for our studies, are all in the negative territory, with similar things seen on the hourly ones, although some gain of some momentum was seen, but as long as I would say 55 days moving average currently at 123 and 123.15 as Friday's high stay intact, not much to be expected. Also above break above this level requires some more gains through 123.40.50 and a more significant 123.86 high of 9th of August. That will ease the current bear pressure and refocus the upside levels that are at 124 and 124.40 double top, acting as a very strong barrier. So far, ideally, actually, the reversal should occur at this point, or reversal of the pullback of corrective pullback of 120.42 to 122.40. Ideally, this should occur at this zone for fresh extension higher, as the pair is still in the short-term uptrend of 120.42, 24th of July low, but current negative tone seen on the lower time frames sees more pressure towards the downside and more risk of break below 122.40. That will set that is seen as a trigger for further extension lower. Otherwise, clear break above 123, 123.15 would be a good signal for a stronger recovery, but minimum 123.50, 123.86 to be regained in order to confirm the higher low at 122.40 and open way for further extension higher. Sterling maintains a positive near-term tone after last Friday's strong rally of 155.76 that peaked at 157.00, touching the strong psychological barrier at 157.00. But larger picture still shows the pair entrenched within the range, with the upside being well capped by 200 days moving average currently at 157.22. 23, pardon, and the range tops at 157.66, 76 zone, reinforced by descending 90 days moving average currently at 157.42. So big number of strong barriers seen on the upside, with the still range trading seen at this point, despite the series of higher lows seen of 152.67, pardon, 31st of May low. Upside still remains quite well limited, and basically the no clear break above 200 days moving average since the price moved below this indicator on 22nd of May 2012, keeps cupping the upside. Near-term outlook positive tone is still seen on the hourly chart following last Friday's strong rally with the corrective attempt on overbought conditions of 157.00. So far finding a support at 156.57. Ideally this should be good base as 20 days exponential moving average so far holds the downside on the hourly chart, and looks for a possible stretch towards 157.00, through which to expose our previously mentioned strong barriers, 200 days moving average at 157.23 and the 157.66.76 range tops. 4-hour structure is also holding a positive tone as a brief break above previous highs at 156.80 zone and touch of 157.00 as a psychological barrier sees potential for further extension higher as indicators are holding in the positive territory and they're still pointing higher. That might be a good signal for possible test of important barriers 57 and 57.23. Of course, absence of any indicators and any more significant events today might not give enough fuel to the pair, and most likely we'll be seeing the technical trading during today. Regarding the dollar yen, it is the pair is on the hourly chart. It is on the near-term corrective action, brief correction of 78.16, but more important to see that the pair is actually in the sideways trading range, trading consolidating recent losses of 80.61 high of 25th of June that found a base so far at 78 zone that acts now as a quite strong support. A slight ascent of 77.90 actually, that was the low of 1st of August, so far been clearly limited at 78.76 where we see the 3 attempts here, unsuccessful attempts higher. That also marks 38.2% retracement of the down move from 80.09 down to 77.93. And so far offering a good resistance. Last Friday's descent and sharp move lower that dipped to 78.16 still keeps downside in play as studies are turning into the negative territory on the 4-hour chart, and the attempt of 20 days exponential moving average crossing below 55 days. One sees more pressure at the pair and keeps more risk towards the downside, as well as hourly studies are being firmly in the negative territory with the 78.38, 78.40 zone so far cupping the upside and keeping the upside levels well protected. This is also the 38.2% retracement of the latest down move from 78.78 to 78.16, and unless we see break above 78.40, that will improve the near-term price action and basically resume the near-term corrective move of last Friday's 78.16 low. More pressure will be seen out at the downside with the break below 78.00 seen as a trigger for further extension lower, and basically for a test of the lowest point of the down move from a yearly peak at 84.17 posted on 15th of March 2012 at 77.65. This was the low of 1st of June 2012, and this basically will come into immediate focus in case of a break below 78.00. A negative tone still dominates on the daily chart with the 200 days moving average at 79.16 so far holding the upside well protected. And basically we need, in case for any stronger move higher, for any action higher and averting immediate downside risk, we need to see the clear break above 79.20 zone that will signal further recovery and keep the 7800 and the 7765 out of reach. Otherwise, as current configuration of the larger and lower time frames keeps the negative tone more in play, I would say more risk would be seen towards the downside, and a possible test of 7800 and of course the extension down to 7765 unless we see break above 79.20. And a quick look at dollar Swiss in the near term action. They still I would say more sideways tone seen on the hourly chart after the pair extended up to 98.08, denting 98. Handle on the short-term corrective action from 96.54 low of 6th of August 2012, as so far seen as a corrective part of the broader down move from 99.70, 24th of July high that bottom so far at 96.54 and retracing nearly 50% of the entire move where the gains were capped so far. The good indication is seen on the downside as 55 days exponential moving average at 97.50 zone, despite this spike, with the spike lower to 97.47 and ascending 20 days moving average, attempting now to cross the above the 55 days one, sees good support for now, and for possible as long as this zone stays intact, there is possibility of a further extension higher, as the studies are quite positive at this point, but we need to see the clear break above 98 zone, where is also 50% retracement in order to resume this short-term corrective action. Otherwise, however, even break here requires more action higher. 98.50 seen as a Fibonacci 61.8% retracement, and the most significant is the 98, 97, 99 zone, the peak of 2nd of August, a regain of which would give some more strength and refocus the upside levels. Otherwise, the short-term action still sees risk of posting a lower top and possible further extension lower. On the larger picture, the studies are losing traction. This is what I was mentioning on the previous picture, that risk is still seen towards the downside as the daily studies are losing traction and already below their midlines, with main risk seen on failure to regain 99.00. That will see immediate risk of lower top and possible further extension lower of 99.70 peak of 24th of July, as the corrective action so far retraced 61.8% at 96.50 zone, the off rally from 94.61 to 99.70. I would say yes, more risk seen towards the downside at this point, as long as 99 level stays intact. And quick look at the gold. As we said, it's from the fundamental side, and the new side is quite well supported and remains in the ascending mode, especially after the trend line at 16.00, as 16 also as a psychological level has been cleared with the 16.28, our next target, 27th of July high being tested so far, and this is also marking the 38.2% retracement of down move from 1790 to the low of 1526 posted on 16th of May 2012. All right, quite a strong barrier seen at this point, as we have another peaks from at 1624 from beginning of July 2012, and basically break above this congestion would be a good trigger for further extension. 40 is the next static barrier seen. Break basically above this level is seen also as a break point to open way towards 200 days moving average, currently at 1651, to allow for some stronger recovery and prevent the yellow metal from falling down towards the very strong and the critical support zone that stands at 15, 20, 30 levels, 15, 20, 30 zone, and keeps the downside protected since 2000 and since September 2011. You can see the several attempts that failed, but the recent one had during this year had much more attempts lower, and still keeps the more risk towards the downside, as the yellow metal remains in the downtrend from its record high at 1920 posted on September 2011. Back to the daily chart, more positive tone seen now as studies broke above their midlines, and I would say more focus to be seen on 16, 20, 30, 16, 20, 40 zone, I would say at this point, break of which to attract immediate barrier 1650, the 200 days moving average. So I would say that let's put focus on this resistance zone as very important, and in case of break here we might see it significantly higher with the 1658 as 50% and the 1689 as 61.8% retracement to be seen as the next static barriers and the next upside targets. On the downside, on the hourly chart, immediate support. Hourly studies are basically a bit stretched at this point, and we might see some corrective action. Immediate support at 1618, that is seen also as a near-term break point. I would say critical would be dangerous. The danger would be seen on loss of 1605 and 1600. That would delay immediate bulls, as 1600 zone now acts as psychological support. Previous strong resistance now acting as support, and while holding above 1600, positive tone and more focus would be seen towards the upside. That was all for today. Do we have any questions? Now we're in the questions and answers part. I forgot to mention it at the beginning. Now it's your time to ask any question. You can just type it, submit, and I will try to answer. Okay, we have a question about Aussie dollar against US dollar, so we're going to take a look at Aussie. It remains in a strong uptrend of 95.79 low of 1st of June 2012. It retraced, I would say, around 80% of a down move from 108.55 end of February peak down to 120.9579, with the daily structure being quite positive, although a bit extended conditions see potential for some corrective action preceding a fresh rally. The Ichimoku studies are well supportive at this point, while on the weekly also the outlook remains quite positive on the lower time frames. Hourly structure, hourly outlook shows a sort of less of strength of recent peak at 106.12 posted the last Thursday, with the downside being so far protected at 105 zone, with the 55 days exponential moving average currently at 105.20 offering initial support, but losing traction on the the losing traction on the hourly studies, as the indicators are pointing lower, and the MACD already slightly below its midline, seeing potential of further corrective action that is better shown on the 4-hour chart, with the immediate support now standing at 105 zone, with the studies also on the 4-hour chart entering negative territory, and seeing potential for some more serious corrective action of 106.12 peak of last Thursday. 23.6% is around retracement is around this zone 105 as our initial support, while more significant support I would say standing at 104.40.50, where it's 38.2% retracement, and double bottom at 104.37 second of August lows, and more risk would be seen on loss of these levels, while ideal reversals should occur at or above this level. Keep focus at these points in case of further extension. In case of loss of 105, if it breaks lower, then risk would be seen towards 104.40.50, loss of which would delay immediate bulls in favor of a stronger reversal. The Aussie is retracing at the moment. Yes, it's correct. It's correcting. It's still a shallow correction. We saw only 23.6%. As you can see, the rally is still quite strong, but quite extended. Studies see potential of some more significant corrective action. I would say on the larger picture, on the downside, 103 zone, where it's 200 days moving average should in any case hold any stronger reversal, with the breakpoint seen at 104.40.50. This is actually the level I mentioned, the 104.40.50 zone. We have the previous peak of 19th of July and the low of 2nd of August. If we lose this zone here, pardon, if we lose this support, then that's also the 38.2% retracement, then we might see some stronger reversal. I would say risk only bigger risk would be seen on loss of 102.84, which is 200 days moving average. But currently, any pullback so far is seen just as corrective, as the pair remains in the strong rally of 95.79, 1st of June low. Do we have any further questions, comments? Not for the day? Okay, I mean, I'm still fresh in the business, so I would like if we stop it at this point. Just joking. If no questions, then I would just thank you all for being with us today, and of course I would like to invite you for tomorrow. Our session starts at the usual time at 10 o'clock local Cyprus time, or 7 o'clock GMT, and I would like you to be with us again if you find it good and helpful for you. Also, your suggestions, comments, and anything, you can submit it to my email. I think at the beginning, the starting page, you can find my email address. So any suggestions, any comments, anything that you would like to see more to change, please don't hesitate to let me know about this. Also, for those that missed any part of the session or missed it completely, recorded version will be shortly loaded in the YouTube. Our page is called Windsor Brokers Forex, and you can find all this audio video stuff there. Again, I would like to thank you all for being with us. Wish you a nice day, very successful trading, and we are back tomorrow morning. Thank you.